Good afternoon. My name is Nader Sabri. I'm the CEO and founder of Times5, and I've been afforded the luxury of having this great session today. I genuinely believe, after meeting all the panelists that we have here today, we're going to have a groundbreaking session. There's definitely one promise that I can give the audience here today, and that is I promise you're in for a treat. We've got a set of experts from the region and globally who have done everything from taking a concept or just an idea and exiting these businesses. Several of the people on the panel here touch on several different industries, and they are very well traveled. Our conversations earlier touched on many friction points in the ecosystem and many of the great things that are happening as well. So what I'm going to do is I'm going to start by kicking off this session by just asking just a very simple question. By show of hands, how many entrepreneurs do we have in the audience here today? Investors? Government? Well, let me get started. I'm going to give a quick 30 seconds to every individual on the panel just to introduce themselves, and then we're going to get started. Today we're going to cover the Mena ecosystem. Is it working or not? And we're going to go through a set of very basic high-level questions in the sense of what's working, what's not working, and why. What are some of the lessons that have been learned from this ecosystem and other ecosystems around the world? And what does the future look like? I'll start from the very end. If you can introduce yourself and tell us.
Co-founder and CEO of a company in San Francisco called Unoodle. And Unoodle is a company that helps large corporations and governments engage startups around the world for innovation or talent purposes.
My name is Sabal Ben Ali. I won't go through everything. I'll tell you one bit which will be important for the rest of my talk. In 2001, I bought a company called Zawiya, a bankrupt media company based out of London. We moved it to Dubai. Over 11 years, we built it up. It ended up with 40 management and operations in Dubai, 200 in Beirut. We sold it to Reuters for 20 times money. And that's the story I'm going to be using for the rest of today.
Manish Patel. I lead the West Coast office for a global venture capital firm called Holland Capital. I manage about $4 billion doing early stage VC investing. I'm also a professor at Stanford University in the United States. Before that, I was an early employee at a small company which became a global company called Google.
Welcome everyone. My name is Katharina Arnold. I'm based in Berlin, Germany. I help companies, startups, SMEs in entering Germany, as well as governments in trade mission and FDI attraction strategies.
Hi, I'm Jake. I'm a partner at AngelList, based in San Francisco, USA. We are the world's largest marketplace for startup investing and startup jobs. Since launching our online fundraising business in 2013, we facilitated about $500 million of investment into over 1,000 companies, and we're growing quickly. We'll invest in another 500 companies this year alone.
I am Fahad Sharq from Tech Invest. We advise U.S. companies on raising capital from the Middle East, mostly on the late stage venture capital side. We've raised just over $500 million so far in the last 24 months, and we look forward to introducing more companies to this part of the world.
Hi, I'm Fadi Al-Husseini. I'm Middle Eastern. I was raised and educated in the Middle East. I started my career as an investment advisor to one of the prominent Middle Eastern banks. And at the moment, and for the past 14 years, I'm heading the family investment office of a Middle Eastern family.
Great. So let's get started and let's have some fun. I want to start with a question about what is working in the Mena ecosystem. I'm going to pass it over to Sabah. What's interesting about his background is that he's exited actually one of the first companies in the region, which actually was targeting the region but wasn't in the region. So I think that there's a lot that he can draw on, and then I'll let the remaining of the panel to go from there.
So I'll just pick one thing, and I think it's probably one of the most misunderstood. Everyone that I've been listening to today keeps talking about how they could remove government regulations. The reason Zawiya made so much money is because it's difficult to do business here. I knew how to do it, and the team I put together knew how to do it. Reuters dumped 200 people into Dubai Media City. That's just expensive. Why move 200 people from Beirut to Dubai and pay triple? We hired them in Beirut, for a third of the cost. And we also ended up building a product that they couldn't quite understand. We had more screens than Reuters and Bloomberg, Middle East screens, than Reuters and Bloomberg combined. And the reason is Reuters and Bloomberg only thought about going to ADIA. They've heard of Abu Dhabi Investment Authority. They've heard of National Bank of Abu Dhabi. But they didn't understand that there's 200 centimillionaires in Saudi Arabia alone. One billionaire dies in Saudi, suddenly 10 new billionaires are born because of their kids. And the reason we could get 20 times money in 2012 is precisely because it's difficult to enter this market. And we're not the only ones, of course. I did it again. We built an investment bank, sold it to Credit Suisse. That was before it even started making money. And that's because Credit Suisse wanted to enter Saudi Arabia and had absolutely no clue how to. When they came in with us, they were the first international to come in. We're not the only ones who did it. Maktub did it with Yahoo. Why would Yahoo need Maktub? You know, getting email accounts is technically not that hard. But Maktub figured out how to Arabize, localize, and that's what they did. The most recent one, which I know they want to talk about some more later, is Souk.com. Why does Amazon want to buy Souk.com? You don't need Souk.com just to order something. You know, Amazon can do that. What you need it for is fulfillment. How do you get around the local municipality laws to get your product that you bought from the seller to the buyer? And it's fulfillment that they really bought. They didn't buy it online. They bought fulfillment. So it's a strange paradox that the very rules and regulations that everyone's trying to remove are the ones that you can actually make a ton of money on because we have the local knowledge about it, and the internationals have lots of money, but actually don't understand how to do it.
Great. So is there anybody else on the panel that can draw on some experiences about some things in the ecosystem that they'd like to highlight that have been working very well, especially in the areas of like some of the talent, creative talent that's coming out of the region, some of the ideas?
Well, I lived in Lebanon for a long time, and I know a lot of Lebanese. And the Lebanese, one of the creative and one of the good things about their ecosystem is that they're not afraid to experiment. So it made them actually leave Lebanon, leave the Middle East, learn how things work, get creative ideas, try it themselves, which made some of those people very creative. One of the stories that is very well known now is a young lady called Aya Abder. She did Little Bits, which is the electronic version of Lego. Small idea, something that she was creative. She made it work, functional. Some people believed in it in the US, and now she's one of the top 20 powerful women in the US when it comes to the electronic devices, or in that sense. So the Middle East ecosystem also went some turbulence that made people be creative. They wanted to think out of the box. They wanted to solve day-to-day issues. They wanted to solve their future. So they made them, they were forced to be creative. And they were embraced. And another story is W Motors, which is a Lebanese car designer. He went to Italy, created this car, and now actually the car is more than $3 million worth. And I think it's adopted by Abu Dhabi now, and is going to be launched very soon. So the Middle East is in my opinion, is a center of creativity for many things that might have probably is difficult to live in, which created and challenged this creativity. So.
It's very interesting that you draw on that point. In my early days in the ecosystem, we used to do quite a bit of work with the Kaufman Fund, and we used to run startup weekends, several weekends in a row across the UAE and the rest of the region. And we found a very interesting pattern. We found that the first 3 top winners would take the money they won and probably would do very little after that. But then the company number 3 all the way to number 10 would actually be the companies that were successful. They go and start using some of the resources that they gained at some of these startup weekends, but very few of them, almost none of them, actually set up in the region. And on that note, I think maybe Fahad, if you don't mind, you can draw on some of the experiences about, because I think you focus a lot on startup companies, funding moving from the region with startup companies outside the region. Maybe you can talk a bit more about some of the friction points in the ecosystem related to that. If you want to start, of course.
No, you use the word ecosystem.
Ecosystem it is.
Okay, and I said that word doesn't really mean what it's supposed to mean, because an ecosystem means that there's this whole system in place that allows you to go into fruition based on the efforts and the investments that have been put in place. And that takes in the whole from genesis to exit, right? So you need the research centers, you need the student body that is allowed to come and experiment with the research and then monetize that when they leave, and then get the funding from the governments and the VCs backed by the government, and all the way to regulations and policies that are friendly to startups, to help them go to have successful exits. That to me is what an ecosystem is. There are attempts to develop an ecosystem like that in the Middle East, sporadically, displaced attempts, little islands, I would call them. But we're in Dubai, so I think Dubai is a great place to highlight the efforts that have been put in place to develop this ecosystem. And so, there's universities here, there's, conventions like this that, motivate people and help activate some people to come in together and do things. All the VCs have an office in the Middle East, have an office in Dubai. That's a sign. And then, of course, the government tries to come up with all sorts of initiatives to help people. And that's why, the gentleman mentioned Souq, but I'm a big fan of Kareem. That's a great app that's indigenous to Dubai. And of course, Zawiya is in a great exit that also, was relocated to Dubai. And so I think the ecosystem is in its very early stage of infancy in some places, but in general, in the Middle East, we need much more. We need much more. If I can just give you a quick example of the Chinese experiment, China decided to move from an agricultural communist society in the 50s and 60s to the leader in heavy industries in this decade to actually a leader in innovation. If we look at Alibaba, WeChat, Baidu, Didi, all these are Chinese examples of huge places where success is happening as far as startup to exit. Alibaba most recently, the IPO was one of the best. The Chinese government put its own money. The Chinese raised 338 billion last year. That's 5x all the money that was raised around the world. And to put almost $250 billion, a third of $1 trillion actually, into venture capital in 1 year is an indication of their seriousness. They called it government's guidance funds. And they created 700 VCs, which in turn created 1,600 incubators. And that's going to lead to innovation. And that is a ecosystem that they put in their place, with everything coming together.
But what were some of the unique elements that they put in place to trigger this? I mean, this wasn't just something that popped up like that.
Well, money, 338 billion.
Well, so beyond money, I mean, what
you need
else
money first. The governments here don't allocate to venture capital. They don't.
Okay, so money is the starting point.
Of course.
Yeah.
The U.S., California, and I'll let Manish and Jake maybe speak about the California experience.
Sure.
But why don't you ask them what the California has done to start an
Let's
ecosystem.
Let's hear some experiences from other parts of the world and how other ecosystems are dealing with this.
Well, I think it all starts with supremely talented engineers. I think you're unable to build strong technology companies unless you have really, really good technical talent. And while I think it's easier to build companies now remotely, it's still supremely difficult. So unless there's a critical mass of really talented engineers, I think it's hard to do. That's where it starts, and that's something California has, terrific supply of.
Okay.
Yeah, I
Access
think,
talent.
If you look at sort of Silicon Valley, an example, or in Boston or other U.S. cities, there's sort of 3 core elements you need for the ecosystem to get started. One is sort of academic institutions where there's a research culture. 2, you actually need sort of the engineers, the talent on the ground, as Jake mentioned. And 3, you need a source of capital, which actually understands the high risk, high return sort of capital, venture capital. The combination of those things, in addition to then a culture of entrepreneurship, whether that's in Silicon Valley, it's tech entrepreneurship. In other places in the US, there's other types of entrepreneurship, you know, whether it's in Houston, around the oil industry. It's about a culture of that, which then builds on itself. I'm excited actually for what's happening in the region here, because now there's been a few large exits, and that shows people that there is a North Star, a shining light that you can move towards, which I think in Silicon Valley there's been a number of those, and even in the US, in New York and a couple other ecosystems which are just getting off the ground, we've started to see those exits. So I think you need to see that to encourage people to, you know, leave a traditional job and become an entrepreneur.
If I could maybe add something. First thing, I think that the creation of ecosystem cannot happen overnight. It roughly takes up to 20 years to build up really a successful and stable ecosystem. Looking at cities at New York, Singapore, they were the first to implement policies in the 90s already. But I think everybody has a chance, every city, from small nations, small cities. There's no unique formula, really, to be attached, because it's rare to find a city blessed with all the attributes that really attract entrepreneurs. I think we have 4 basic things. So one is the tech talent that has already been mentioned. Quality of life is very important, really the spirit of being entrepreneur. Global reach, startups want to have capacity to access to new markets, and then of course venture capitalists need to be really present to attract entrepreneurs.
Yeah, I think Torsten, yeah, he has some examples of some unique activities in Chile and other places where they're trying to get things stimulated. If you can share some of those with us.
Yeah, absolutely. And it's kind of a fascinating time that we live in, that we now we don't have to be Silicon Valley any longer. You know, there's so many tools for entrepreneurs out there that just popped up in the past 5-7 years that now means that you can actually build and scale products and companies in a lot of other places. And I think that's really cool. And I think one example that we spoke about in the prep for this panel is a few days ago, I just came in from Chile, from Santiago in South America. And what they have done there is a program called Startup Chile that the government runs, but essentially is about attracting foreign startup founders to come to Chile and build their companies. And so they have, over the past 6 years, invested heavily into making it an ecosystem that is attractive enough. So they provide co-working space, they provide mentoring, they provide visas, you know, just sorting out the work and live situation, and they give you funding. They give you cash just to come to Chile, and they don't take any equity. You don't even have to incorporate in Chile. I mean, it sounds almost too good to be true. So the government, as a result of that, have seen over 5,000 applicants from founders a year, and they have taken about 300 startups every year that come to Chile. Now, not all of them stay, but just imagine the power of that model that they say, we're Chile, we're open for business, we'll help you scale your companies, and we're willing to do whatever it takes. That commitment has completely changed the ecosystem that they have in Santiago, and I think it's something that a lot of other countries these days are looking to see. How is that possible when you're sitting in Santiago, of all places, to, in a relative short amount of time, completely change the startup ecosystem?
Yeah, I really agree, really. The World Bank just nominated Santiago in Chile the most foreign entrepreneur-friendly city. So really what they're doing, it's free visas for 1 year. They have a free workspace. They even receive $30,000 cash grants. So really it's like a very, very successful success story, I would say, on how a region, a city that don't have so much local talent really like managed to attract foreigners.
I think it's really cool. I have an anecdotal kind of piece of evidence. I'm not sure how statistical it is, but all of my friends who went through Startup Chile, this is how it kind of works. They quit their jobs, they start their company, they apply to Startup Chile, they get in. I think they get like $20,000 or $30,000. They do a couple weeks down there, and then they move back to the States. So it's kind of like a free vacation. I think really favorably of Chile. I think it's a cool program, but I don't know, at least amongst the high caliber entrepreneurs that I've been working with, if it's driven any impact for them.
Okay. Fadi?
Talking about the ecosystem, it's very difficult to pinpoint what's the ecosystem that's going to help and generate more growth or startups or creativity. My colleagues talked about funding, talked about Genesis, but this very important is pre-Genesis era that takes 20 years to reach to Genesis. During those 20 years, there are multiple factors that we need to start off with, like culture. We are all in the Middle East raised by our parents saying, get employed, be secured, and support your family. And that forces us to have a burden from the beginning instead of following our creativity, following our chance. It's not easy for a Middle Eastern to leave work, stop getting income, stop supporting his family or himself. If during those early periods of startup anything happened to his health, he doesn't have medical insurance, he doesn't have other welfares, I mean, he doesn't have anything to support on. So we need to start with literally pre-genesis. Also, I mean, I heard in the US technology that people need to be tech savvy before actually being creative. That's true, because the US was funding many tech programs that failed, but those failures were the platforms for future successes. To my understanding, I might be mistaken, but NASA by itself is a cost center. But the technology that comes out of NASA, that comes to our day-to-day life, that comes to help people being creative, is the platform of future creativity and growth in startup. And this is what the Middle East need to start off with. Culturally be to accept and encourage creativity, encourage people to take a chance on their creativity, and then the funding would come and say, we're willing to take a chance. Even if that startup isn't profitable during the first years, but for sure it will benefit in the longer term.
I think we're hearing like a mix of different things that are the ingredients of making a successful ecosystem. We're hearing about talent, we're hearing about money come up several times, we're talking about culture. Culture is usually a heavily overlooked element of an ecosystem, and failure as a part of a culture is something that is obviously looked down upon in many places. It's very difficult for people to get through in certain cultures, and this region is definitely not too far off from that kind of culture. So, I mean, drawing on all these issues, and Fahad, as you mentioned, I mean, what's the starting point is money. Beyond money, I mean, let's put that aside. I agree with you. That is a very important point. What else from international experience or some of the ideas from the region that a policymaker can look at and understand what is it that he can do tomorrow, or he or she can do tomorrow, to help to move this system forward? I know it's going to take time and there's a lot of effort that's required, but what can be done? How do we move our ecosystem forward?
Can I say something?
Yeah.
Before we look at what's working out there, let's look at what's not working here. Okay, you know, part of not being able to get an economy, or an ecosystem, sorry, going might be all the predators and the parasites. So one of the first things we'd like to, or I'd like to see gone, is the agency monopolies. If you're going to have businesses and family groups with cash cows because they have a monopoly that can just copy you and push you out, then you don't have free market capitalism. So that's got to go. Number two, we've got to stop having as the risk of entrepreneurial failure should be losing your money, not going to jail. So the security check issue where you have extrajudicial imprisonment, that's got to go. So our issue here, we have 50 banks, 50. There's 8 million of us, 6 million are blue-collar workers. We have 50 banks, 23 are operating. That's just ridiculous. That shows you that there's something wrong here. So before we actually start going down to, let's look at best practice over there, let's stop here and think about what is strangling the ecosystem here. And I'm sorry, I was once a banker, but 50 banks is about, I don't know, 46 too many.
Go for it.
Yeah, so I'm not an expert on the local ecosystem here. I'm not saying you're wrong at all. I think I'll just maybe bring up some other aspects of the I guess more cultural challenge that we have. I often see a bit of a struggle between the founders and the investors, where the founders say, the investors don't understand me. All over there in Silicon Valley and in the US, they are much more risk-taking, and they understand I'm trying to build something great. I'm just here. They're just sort of provincial. They don't get it. But on the other hand, you have the investors that are looking at the founders saying, the founders don't have the track record. I mean, this is not Mark Zuckerberg. I'm not sure I'm going to get my money back. To your point earlier about, you're investing because you want to make a good investment. And I think that struggle is something cultural that we have to get over. Every single successful startup in Silicon Valley was created as a combination of investors and founders that work together to make that happen. And often I look at it as you have to, as an investor, not see a startup as an asset that you have to sort of put a value on. You have to see it as an opportunity. It may work, it may not work. But essentially, it's an opportunity that you, if you want to, can work together with a founder on building out. And it places you in a completely different mindset as an investor. It's really hard. It's really hard to do, but I think that struggle is something that we have to get over one way or the other.
Yeah, I think, yeah, and this is a common theme that I've seen in our discussions and being in the ecosystem for quite a while. There's an overemphasis on profit and risk. I mean, that's important, that's why you're in business. But at the end of the day, an opportunity, in order for an opportunity to be fulfilled, you need several players to come to the table, including investors, entrepreneurs, and other people that can work with you to make that a success. So part of our earlier conversation, I think family offices, you were talking about some of the investment culture. Maybe you can draw on some of that, because family offices play a very significant role in the ecosystem here, one of the sources of investment.
Well, of course. I mean, well, I can't generalize for family offices. There isn't a single family office that's identical to another. But if we take the very definition of a family office, it is the progression of what a family does. Starts being an operating company, from being an investor, then moving to becoming an investor, and then become asset owners and investors. So they move away from being a creative mind into becoming investor. And by definition, if you want to look at investments, about risk returns. And the most difficult thing for family offices is to really analyze what's the potential return, what's the risk behind it, and as my colleague said, how can you work together to make it succeed? Because in venture capital, what's really important, and I think Sabah can touch on this, is it's not important whether the idea is just right or whether it's going to work in this economy or whether it's demand. It's how can you work together to make it successful. Because, I mean, Sabah was telling us that Zawaya was almost a bankrupt company when they had bought it. And I asked him, what made you buy it? And he said, well, it's something that we were interested in among other deals. And what's amazing is that he was able to transform Zawaya from an almost bankrupt company into a very successful company in a very difficult market to operate. So to go back to your question about family offices, family offices need to contribute in the startup business, but it can never be looked at on a risk-reward basis. It has to be looked at supporting society, doing the pre-genesis, and then hopefully moving to become more investment savvy, to look at the profits behind it, how they can incubate more businesses. But at the moment, again, the ecosystem in the Middle East makes it difficult for the family offices to assess these, the benefits out of funding or supporting startups.
Common, I mean, to bring to the table as well, one of the common issues I hear about as well is the due diligence process.
Absolutely.
Is very intense and expensive for a lot of local firms to do, and so they want to offshoot that risk to somebody else in the chain. And so a lot of startup companies become a bit of a victim in the process. So I want to ask a bit of an off-the-cuff question to those who are investing on our panel. Have you ever invested in a company whose fundamentals made absolutely no sense from day one?
Sure. Zawiya wasn't almost bankrupt, it was bankrupt. And you can't do due diligence in the way that Western markets or mature markets look at it. We looked at it as simple. We're going to go in, and whatever's broken, we're going to fix. So that's the only way we could do it. So we went in. It was an absolute mess. The financials we couldn't even make sense of. And so we just, and then just built it up from there. So I think you know, there are some things we can take from the developed markets we can learn from, but there are other things that are, you know, a bit too early for us. And right now, you know, VC is about rolling. I spent 30 straight days after we bought it trying to get it going. And as chairman, I was there once a week for a full day. That's how you get value. There is no other way. This is not about do DD, sign the dotted line, and then, you know, four times a year.
I would say all the companies I've invested in, if you look at it from a traditional investor lens, the fundamentals never make sense because that's the point. In an early stage company, you're trying to do something very disruptive. Even at Google early on, there was no business model, and no one thought that advertising was going to be the thing that would change the internet, 15, 20 years ago, but it did. And so the fundamentals are different, and I think that to the comment on sort of the family offices, I think it's hard for a traditional investor or family office to do direct investing in early stage companies because it takes a different mindset and a skill set where I think it's useful to partner with those that do look at it day in and day out. The same reason you may partner with a Goldman Sachs or TPG or a late stage firm to do investing at the early stage as well. I think it's critical because there's specific skills that are needed, not just to evaluate the deal, but as the company grows. How do you help hire? How do you put a management team in place? How do you build a board of advisors? All those types of things.
Interesting. Anybody else?
Well, I mean, with the venture capital, right? I mean, the word venture means you're going to take an adventure with your money. You don't know what you're going to come back or not. And so you have to have faith in the story, and you have to believe it. And so you have to be actually a person where you're willing to believe a lot of stuff that fundamentally don't make sense. And the complementary skill sets of people on a company that takes decisions, whether it's a family office, whether it's in a boutique, investment advisory firm like ours, where, different people discuss the story. Do you like it or not? But again, in Silicon Valley, when we look at the companies, their financials don't make sense. They don't have audited financials. They're just telling you whatever they want to tell you. Yeah. And they call it pre-seed, seed, pre-A, pre-whatever. And you have to believe it. Here, again, one of the problems, I think, with Sabah's point, first and foremost, you need to go get an auditor to audit your financials. There's a bunch of kids when a startup. Auditing costs money.
Yep.
Okay, and then they don't have numbers. They're going to be making losses in the next 3 years. So automatically, the auditor will give them an F for failure.
Yeah.
And they labeled failures before they even started. Again, to the culture point.
Yep.
And then, people are rewarded over there on several failures because they tried. Here, you're labeled as a failure because one of the ideas didn't work because the network is not ready, not because the idea is not great. And so, from a regulator point of view, to fix the culture, they need to give breaks to startups. Startups for 2 years are not allowed, are not required to come up with financials. So you can't even do due diligence. You have to go with your faith.
Yeah.
I think that's what this part of the world is also lacking.
I like that point because, I see it all the time. The due diligence process kills everything. It's almost pointless to even start in most cases. How do you go on faith? I know it's a personality trait that you must have, but if you were to give something to sink your teeth into from your own intuition or experiences, what can you tell other investors in our ecosystem to approach things like that?
I'll let the VCs.
Yeah, I would say a few things. It's not they're not the fundamentals that don't exist. They're a different set of fundamentals. So at the early stage, particularly in Silicon Valley, sort of from the perch I sit on, it's very much looking at the team and the people and the capabilities of those people, right? Are they people that can become a CEO because you've seen other great CEOs? Do they have the technical talent to build something creative? Do they have the ability to recruit people around them? Do they have the ability to figure out new, different creative ideas that no one else can, right? And so can you evaluate the people and have that side of it? The other side of it is looking at the market opportunity, right? Are you able to really see the market? How many players are in the market? How is that evolving? That's also really important. And sometimes people in the US will talk about, is it a $1 billion market? Is it a multi-billion-dollar market? Because if you think about most startups and big companies, maybe they only own maybe 3 to 5% of a market. And if they can get to that size, can that become a US IPO-able company? So those are the fundamentals that we're looking at the early stage. Beyond, and then later on, a different set of fundamentals come in, I think, which more traditional investors are used to.
Yeah, I could talk for hours about how to successfully invest in early stage companies. At the end of the day, it's really, really hard. A lot of people in Silicon Valley have been doing this for decades. A lot of it's gut feel more than it is an actual equation. But one thing that's very unique about it, that I think most people, specifically family offices, when they invest, aren't probably used to, is the failure rates in the portfolio. So in venture capital, it's very common to have over 50% complete failure rate in a seed stage portfolio. 50% of the money that you goes absolutely to zero. So as a result, it doesn't necessarily make sense to do intensive due diligence on these companies. One, they're young, they don't have any data, but number two, 50% of them are going to go to zero anyway. So a lot of the people in Silicon Valley, early stage deals, that's kind of their due diligence process. It sounds bad. As they get later stage, you evaluate it more in depth, but it's very much on gut. The other thing that's really interesting about venture capital is the return profile. So venture capital returns follow something called the power law, and this is unlike any other asset class. What this means is that in a portfolio of N companies, your best company is going to return more than numbers 2 through N combined. If you look at Excel's Series A investment in Facebook, that returned more than pretty much any venture capital firm returned to their LPs during that entire venture cycle. So you have this very large power law distribution. So what you're really buying here is not necessarily an investment. You're buying what we call out-of-the-money call options, a bunch of things that are worth zero at this time, but may have the potential to be very valuable at a later date. So the entire process by which you approach it is vastly different.
I disagree with that, but I think this will be healthy, because saying one is going to win everything and the rest are going to fail, you just go to a roulette table and bet on Black 13. It's much more fun. I think here, and I don't, again, I want to talk about here, we are so inefficient as a market because we are young that you can extract value. And I go back to the points you made, which are find the right people, and if they're not the right people, be ready to fire them real quick and replace them. Plus, look at the macro view, which is that, I believe in this overall, let's call it asset class, if you will, not VC, but the business itself. So I would say that in the GCC, at least, you're not going to get these massive returns. It's just not going to happen. And therefore, what you really want is to try to get the decent returns, the 20–30% IRRs, but on a wider scale. So I think maybe one day will be big enough where you can get these massive returns that can wipe out all your losses. But I think right now where the sweet spot is trying to extract the inefficiencies and hit the 20, 30, 40% IRRs. Yeah. You're nodding. Do you agree with me?
Yeah. No, I do actually. I think it's right that in Silicon Valley it's absolutely a power law distribution. I think it's absolutely right. But I also think there are plenty of other ways to be successful as an investor in startups. The most successful angel group in the U.S., for instance, is not in Silicon Valley. They're somewhere in the Midwest. And they just specialize in a very particular type of startups, and they sell them at a very particular point, and they work hard to get it, and they manage to get 10x return on their investments all a single time. And it's a totally different strategy. It would never work in Silicon Valley in that sense. And I think it's important to think a little bit about what is, wherever you're focused as an investor, what is that your local pros and cons, and understand the environment you're in, and find a model. But it is hard. To Jake's point, it's terribly hard, and it's probably a terrible idea to start investing in startups in general. So you should only do it if you feel like you come in with something, an edge, an insight, a belief, something like that, most likely.
Well, I think there's several rich examples of what's being done around the world. Silicon Valley obviously stands out because of its history, and it's very loud. One of the things maybe that you can draw on, Torsten, is he focuses on finding alternative resources outside of venture capital and finding other ways to get funding and startup companies moving forward. Maybe if we can shift the conversation that way.
Yeah, I'm happy to speak to that. I think there are a lot of resources around the world for startups, and I think what's kind of fascinating is this almost revolution we're in where you now can go anywhere. And indeed, startup founders are much more mobile than ever before, move across borders, and will happily go for a certain stage of their development or training, go somewhere and then go somewhere else. And I think that's really, really fascinating and a huge opportunity for the market we're in. So there are a number of alternative ways that resources can be met. You know, I mentioned Chile as an option before, but there are also a lot of corporations that are effectively trying to engage startups, not in the kind of traditional way by acquiring them or placing strategic investments once they're further down the line, but they may do it very, very early before they're ready to do anything, and maybe only give them, let's say, $50,000. But $50,000, when you're a couple of guys trying to get something off the ground, can be a huge difference. So there's money to be found in a lot of corporations that have startup programs of different types. There are governments that offer incentives around the world. There are foundations. I mean, there's a lot of ways to find capital, and a lot of that capital in the lower end doesn't even require equity. So you can actually raise funding in the lower range without giving up ownership, which gives you some flexibility as an individual, right? Once you're ready then to grow, then there are platforms that specialize in equity-based financing, like AngelList, for instance, is a fantastic place. But I just want to mention there are a lot of alternatives out there all around the world, and it's just about being open-minded and understanding what's outside of one's own ecosystem if you don't find it where you're based.
Excellent. So moving forward with that same, perspective, can anyone else on the panel share some of the experiences that they've had where startups can tap into other alternative resources, or some unique government programs like we've talked about in Singapore, in Lebanon, they have the 311 or 331, I believe it's called. So there are some policies in place that are trying to stimulate things. If we can draw on some of those examples or other alternative ways, just like you've initiated, that others have seen to approach getting the resources they need.
I could share one thing. I won't mention the specific country because I'm not trying to offend anyone.
Yep.
But I've seen these programs are very beneficial for startups. They get government money. They're able to keep the burn low. It's also fantastic for the investors in these companies. I've actually seen it backfire in most cases and hurt the ecosystem. The reason being that it allows companies to monopolize talent and stay alive longer when they shouldn't. So what you have is the government subsidizing companies, not necessarily the right companies. The talent stays at those companies instead of moving to the ones where they really should be working. So I've observed that multiple times. I think it's obviously positive for the ones that are able to keep that talent, but sometimes counters actual innovation.
Yeah. Are those ecosystems smaller in nature? Is that why that can happen?
No, I mean, these are pretty sizable startup markets that I've seen this effect happening in.
Interesting. So the counter to...
Yeah, we call it, they keep the zombie companies alive. They've received government grant after government grant, and they have the engineers there, and the engineers don't leave to go to the good ones.
Interesting.
I would maybe agree with what you're saying, that grants are not the most important aspects when it comes to supporting ecosystems. So I would maybe because we have a lot of government officials here in the room, also maybe give them, from my perspective, 4 pillars that are important to create a working ecosystem. So the first one is really the activation of the entrepreneurial education, what I would say. We can see maybe that countries as Helsinki are now putting in place that they are putting high school accelerators. So they're targeting already people who are 14, 15 to really get them into this entrepreneurial move. Then what we also see, for example, in countries as Estonia, which is the country for e-governments, it's like the facility of doing business. You don't have to be in Estonia to create a bank account or even register a company. Make it easy for startups. What we then also have, what we see why Berlin, for example, is so successful. They have really affordable neighborhoods and really affordable and a lot of access to working space. As we say in Berlin, we are poor, but we are sexy. That attracts people. The other thing, of course, is policy, so taxes, but it's really not always about the money. I think the second point, the pillar, is globalization. So that's venture capitalists and talent, really. So there, we need to bring investors on board to support startups, create what you were saying, unicorns. So those are this big exit because they will help to attract and motivate really smaller startups to also come. And then what I also think better than direct investment into startups is really also investment in supporting universities. So for example, creating incubators or startup labs on the campus of really challenging it from the start beginning and not just when they have the idea and just want cash. I think just cash is not a good idea. If you look at Poland, for example, 90% of startups are self-funded. They say, we don't want the cash, because we want to do it from scratch from ourselves, and they have seen that a lot of cash can ruin a business. So what you were saying, they're storing for much too long time on the market. Then another thing is really the expansion, to like support startups to expand internationally, go global. So there is the market reach and the international talent that is playing a role. And there, for example, also some examples that could be given. It's Santiago, as you said already, but also like what's happening, for example, in Dubai. Yeah, Dubai, they don't have a lot of tech talent. Housing costs are very expensive, temperatures are very high, but they still manage and somehow to attract startups and to build an ecosystem. It's about the great infrastructure they have, low taxes, and for example, the tolerance they show to expats. So there also we see that really attracting international talent is very, very important. And then the last thing I think that is important is like really the integration and showing that your ecosystem is sustainable on the long term. So he is really creating even more workspaces. Co-working spaces is really the new trend, like you work in a big office with 10, 20 people having a startup, and I don't pay, for example, for the cost of renting the desk, but I help the other startup in some consulting or some marketing, and they help me. So it's all about exchange. Tech communities, accelerators. Another thing you can start doing as a city or region is really like organizing also a lot of startup events, seminars, pitches. In Berlin, we have every week 10 or 20 like small events. Really start to motivate these young people to go out. I think that is one of the first really thing of really being transparent. Also, for example, Sydney did something very interesting. They like did a questionnaire for like 3,000 entrepreneurs. They did like employees, investors, and educators, asking them really what do you think are the attributes we have to create the ecosystem, and then implemented it in a 10-year action plan. So what I would really say that like for the moment is like that every city has the right to participate, and don't be scared if you don't have all the assets. So like the most important assets, which are tech talent, quality of life, global reach, and venture capitalists, that are in place. You can still like use one or two of your assets and really push for them, so to create ecosystem.
Thank you. Fahad,
I would like to add, that's a very good point. I think just to highlight why Dubai also, Dubai launched its e-government initiative in the year 2000. That's 17 years ago. The government had to switch to an electronic government. And that opened the space for a lot of engineers and stuff to come here to build these systems. And then a couple of years ago, Dubai announced the smart city. Everyone in all the government agencies had to have a smart app. And so these are initiatives that help, bring attention and bring quality talent to come here, because there are things to do. Other GCC cities, they don't even have email. In some of the ministries. You have to go with the papers and an archive of 50 papers, and one of them gets lost.
It's almost hard to believe, isn't it?
It's so sad. And so, that's, the governments need to, start with themselves. They need to automate, and then the automation will become viral, and everybody then starts to look forward to developing, life-changing and, technologies. But if the government is still in with dinosaur time, how is the system going to be created? No matter how many cool telcos you have, you need to lead by example.
Well, I mean, drawing on that point, His Highness Sheikh Mohammed is very open to sharing with his neighbors and getting everyone in the neighborhood. Sharing is caring. He wants to get everybody up and running and competing as well. Why do you think it is that they're not absorbing what Dubai has to offer, or the example it's setting?
Culture. It goes back to culture.
How so?
Well, basically it goes back to whether a person is able to get this idea. Because I don't think the problem is sharing the idea. Open Google, open YouTube, do it yourself, learn yourself. You can teach yourself to do things. But again, if you don't go back to this ecosystem where you're going to encourage, inspire, and celebrate talent, celebrate creativity, fund it, even if you're not expecting anything out of it, then you won't have an incubating ecosystem to take the information or to take what you get to know and develop more into it. I mean, going back to what you were asking, what other method than money to create this ecosystem or to develop this ecosystem? Well, policymakers can do it either directly or indirectly. One of the examples that I think is really inspiring is Saudi Arabia. Saudi Arabia, they were forced, the policymakers, they were forced to subsidize some hospitals. They were forced to subsidize teaching Saudis how to become doctors and help them. Well, guess what? Now, Saudi Arabians are the experts in separating joint twins, which is one of the most sophisticated, complex surgeries. And I find that really inspiring, that they believe that their people can actually learn, can bring it back home, and would teach the next generation. And that's the thing that can develop the Middle East. That is the pre-genesis to now Saudi Arabian doctors are one of the best in the Middle East. So.
It's an interesting example. One of the key words that was used, and we may have all missed it, was kids, young, the youth, was mentioned in one of the examples over there. And I remember as a young guy growing up in Canada, I was part of a program called Junior Achievers, which was basically an entrepreneurial program to capture people who had some form of interest in entrepreneurship as early as 12 years old. What do you guys think on this panel in the sense of putting some of these programs in place? What are some of the things that you've seen? Because I think tackling the area of youth is an excellent starting point to helping change a new generation of entrepreneurs coming forward in this region.
I believe very strong in this. Like, I saw also some very interesting programs from big companies, big consulting companies that were going to school and offering kids like the possibility to be CEO for 1 month. It was an excellent, really empowering them, showing you can do it. Like you don't need to work in a big company for 20 years to reach something. So I think it's very important. Like also the private and corporate world could cooperate more. I know a great example happening in Johannesburg in Africa, where there's like IBM is doing a big accelerator with the city for like 60 million. So really also cooperating with the private sector to motivate them to create accelerators really in the cities.
Yeah, I think that's it's incredibly important to be very aggressive in making sure the younger generation are exposed to entrepreneurship. So that's about education for sure, but it's also about role models. A lot of this is about the younger generation feeling like it would be really cool to be a startup founder, and it would be really cool to build something like he or she built somehow. And I think that's a core part of it is building this exposure to successful founders, both from one's own culture and from other cultures. I grew up in Copenhagen, Denmark, and Denmark is a small country and very much like the UAE is small, it's well organized, it's wealthy, and they started about 10 years ago a very aggressive push towards entrepreneurship education at every level of education. So we also had Junior Achievement, and I was heavily involved in it. It's a global initiative. It's fantastic. But in addition to that, they're making sure that at every level, both primary, secondary school, higher education, that you are exposed to the principles of starting companies. Now, having said that, though, as a founder myself, I can tell you, you cannot learn to become a founder in class. It's not possible. You can learn a lot about what it means. You can learn a lot about the typical downsides, upsides, practical matters. There's a lot of things you can learn about it, but fundamentally, you have to start something yourself to learn it. And I think that's another thing that can be worked on from society's side, is to enable the possibility of starting companies at an early age. Yeah. Let's all start, our first company in high school. Why not? And learn from that. I started one when I was 16, and I learned so much from having clients, from dealing with taxes, and all this stuff that you have to learn at an early age that today benefits me tremendously. So there are a lot of aspects to this, how you get the younger generation involved in entrepreneurship.
If I can localize the international experience. So there's the part of exciting people to become entrepreneurs, and there's the part where they want to be entrepreneurs. Now, to want to be an entrepreneur, you have to feel that you can be successful. 80% of our economy is the government. I don't mean just the UAE, I mean the GCC and the Middle East is pretty high. Your path to success I mean, I said this earlier. The reason Zawiya worked, the reason Maktoub worked, the reason is by bypassing government. So yes, we need to help teach our youth entrepreneurship, but I think there is entrepreneurship there far in excess of what they're allowed. So we need to introduce true meritocracy across the board here and get them to pull out. We have way too many sovereign wealth funds that own way too much of the economy here. You look at all the biggest banks, you look at all, they've just got to get out of it, you know, and instead of being in the mature part where there is no actually end of supply of cash, they should start being in the VC part and funding. So let's see them sell Emirates NBD and National Bank of Abu Dhabi. Let's see them get out of those and start funding VC, because that's where we're having trouble. We don't have trouble funding our mature companies.
Very good
I would
point.
like to add something like to the educational thing. Myself, I've been working 10 years in a big consultancy, and then I was having doubts, okay, what to do? And then there was my option was or doing an MBA or really creating my own company. And I started researching, and a lot of companies actually are saying MBA is the past. Nobody really values them so much anymore because like there are too much people doing them, and better create your own company and go forward. And that's what I did. And I didn't say, okay, I will continue to study. So they, I think, I questioned a few companies and a few senior people, and they all advised me, no, don't do this, just like create your own thing. And there we see where the trend is going. That practical knowledge is like sometimes really more worth than like the theoretical knowledge.
Yeah, agreed. And if you don't mind, I'll share a personal story. I have a 7-year-old son, and when he was about 2 years old, he started coloring on the walls. The first thing that happened, my wife kept telling him, no, don't do that. And I told her, we need to let him actually do that. She's like, how? This is crazy. I said, you got to let him experiment with his creativity. You got to let him feel the world around him, because this is a very fundamental learning point that we are not recognizing and understanding as parents right now at this moment, because it's going to help them later in the future. So I think it's really important for us to start at home with our own homes, including myself, to encourage our kids to experiment and try new things and get out there and believe that there is a better, bigger tomorrow, and that they can be part of that. I think it's a very important message at home. It's just my personal sort of message here. Now, I think we're running, we're not, well, we've started a bit late, but what I'd like to do at this point is we will ask some questions, but before doing so, I'd like the chance for everyone on the panel to leave with a message that could be a piece of advice to an entrepreneur, an investor, or a policymaker that you believe should be a message carried forward at the end of this session. Would you like to start at the end? Yeah.
Sure. I really think it's for I want to focus on governments here and policymakers for a moment. I think it's really important to not just subsidize everything. I think it's much more important to create markets than to finance startups. And I think several people here have spoken to that. Let's not just give startups money because they'll just be kept alive and sort of not really. You need that churn in the ecosystem for it to really work. So focus on creating markets. And what does that mean? That means getting rid of bureaucracy. That means getting rid of rules that are detrimental to the formation of companies. But it also means creation and focusing on new markets and new verticals that fit well into local existing opportunities. That could be within energy, it could be within society, it could be this, e-government. It could come from a lot of places. Focus on the creation of markets and the fluidity of those markets is probably the best thing you can do for high growth startups and for globally minded startups.
Okay, so my message is simple. I've had several successful venture or startup or venture investments, 2 very high profile. Not a single government person has spoken to me. I don't know if you get something speaking to each other, but if you want to, I'm not just the only one. There's plenty of others who have been highly successful. Maybe you need to speak to them.
I would say a lot of folks try to copy Silicon Valley one for one. Even in the US, New York, trying to copy what's happening in San Francisco, it never works. Instead, I would say really try to focus and be honest about the strengths and weaknesses in your local market and focus on that, and then maybe take elements of Silicon Valley here if you're trying to build that tech ecosystem.
Yeah, very good point.
My recommendation would be to really become a connected global city, because that's the most important. Produce exchange programs between leaders, CEOs of startups to really create international platform and really believe in the entrepreneurial spirit. This is very important really to motivate people to like go out with their ideas, and that will attract an investment from outside. And it's not all about taxation.
I'll largely second what Manish said and add that I think technical talent is often very important and a good starting point.
I had an idea and I forgot because I just was thinking about what everyone else was saying. But I would say the following. The GCC governments and the sovereign wealth funds played a very important role in offsetting the dependency that we have on the hydrocarbon oil products that we sell here. And they invested in diversified portfolios, real estate, insurance, financial services, and energy, etc. But they really did not allocate yet something meaningful and material for innovation and venture capital. I hope to see in the next year or two that 1% of sovereign wealth funds allocated, so we know there's a $20 billion pool out there that it's allocated, different places, different spaces, doesn't matter. Invest in China, America, locally, but you need to give VC a chance seriously.
Yep, that's a very good point.
I don't have a message as much as I do have a wish. Most of the family businesses in the Middle East were startups. And my wish is for people, starting from parents, leading all the way to policymakers, to believe in the creativity and the ability of the Middle Eastern and give them a chance and support them and hopefully funding them, and finally celebrate their success in the Middle East instead of celebrating their success outside of the Middle East. So my wish is give them a chance.
There we go. All very good points. So we'll hand it over to the audience for questions. We have, so I can't see everybody because these lights are very bright, but I have some of our helpers here. There we go. So go ahead if you'd like to address it to the whole panel or someone specific. The floor is yours.
Hi, my name is Metin Güvener from Triangle Family Office in London. Would you please, as a panel, comment on trends of impact investing and social entrepreneurship?
Trends in social entrepreneurship, is that right?
Yes, please.
Yeah, okay.
Thank you.
Go for it.
Yeah, so I would say it's become in vogue, in particular in the last 5 years or so, this notion of like social impact investing. If you actually look at it from a returns profile, Cambridge Associates tracks a lot of this stuff. The returns have actually been quite good for small funds that do sort of seed investing on the impact level. At the larger level, it's still the verdict is still out in terms of somebody trying to do pure social impact investing. TPG just raised a $2 billion social impact fund to try to do something like this. But I do think in the coming years, you're going to see more people doing social impact investing. I also think it's a bit of a misnomer when people say social impact. I think there are a lot of corporations that actually do a lot of good that don't necessarily, that I would say have a good social impact, but it's not necessarily social impact investing. Sometimes people think social impact investing means that the business won't make money, right? It's a nonprofit, which is not true at all.
Yeah. I think there's been a few initiatives as well in the region at a grassroots level. I think one of them is called C3, if I remember correctly, which is basically a nonprofit organization that brings people from the grassroots level with entrepreneurs to basically support them to develop their social enterprises. That's probably the maximum I can probably add to that. Anything else? No? Yeah?
Yeah, I would probably just mention that there's also a lot of push from the startup generation in terms of social impact. We're doing a program with the World Bank at the moment across the Mena region called Mena, particularly for women entrepreneurs, and we got almost 2,000 applicants from women founders across the region that want to access World Bank grants, and we're in the process of working with them now. And I think there's a huge push in that group for initiatives that are changing lives for their local ecosystems. And I think that however way that works out in terms of funds and society, it's a great thing for the world that we have a push from the younger generation in terms of building dual bottom line businesses that are both profitable and impactful.
Great.
Thank you very much. My name is Mrs. Fatima. I am Senegalese. I am the president of African Business Women. We have a project, ecosystem project. We would like that our children, the young African people who are in immigration, come back to her country to promote their country. We have a project to realize green villages. In each villages, we would like to build social housing, to give to the actor agriculture area or a poultry company or cattle and aquaculture and unit industrial. This bag is an organic bag by cassava and potatoes. We would like to install this industry in Africa, and we are looking investor for the funding. Also, we urge some old people to speak about political leaders and not economic leaders. I think that we have to create a club of economic leaders, because you have success companies, and you have example for young people. Our villages have to create a startup. My English is bad. I apologize. That I think that you understand. It is our coming in Dubai, and we are looking for partners. In every African country, we would like to build our green villages. These villages will be electrified by solar. In Abu Dhabi is a big country for promoting solar. But in Irena organized a sponsor, but he asked guarantee, but company have not guarantee to have a funding.
Can I
thank you very much.
Thank you. Just a quick comment. In general, if you keep your questions short, it's easier for us to answer more of them. I just wanted to comment about the thing about we want our entrepreneurs to return and make each our countries better. And I think that's something that we're seeing a lot, that this mobility in terms of startups and founders moving, many are actually coming back and are taking the things they learn in other places and coming back and making their countries better. And I think we have to stop worrying about brain drain and thinking more about the fluidity of making sure people learn and go across borders. In Chile, for instance, the program is used a lot to actually attract Chileans to come back to Chile, and with these incentives, create companies, and they're seeing a huge brain gain in that sense of having their citizens return to build companies, which is really cool and an opportunity for many.
I would also only recommend you to see where startups events are happening in Africa, and really go and pitch your ideas and look up where VCs are coming and contact them, or maybe also contact some bigger companies from the region, private companies, and present them their project. Maybe they would like to fund it in somehow.
Okay.
All right. VCs? What are you saying?
Sorry?
Well, Y Combinator is funding a lot of companies in Africa now. In their last batch alone, they had 8 companies from Africa. I think they probably had like 1 company in Africa from previous batches. So that's a big sign.
Yeah. Okay. Next question, I guess.
Hello, my name is Ezra Orozco. I am a Vice Minister of Economy from Guatemala in Central America. And I would like to have a question and maybe one idea. The question is that if there is in order to create a ecosystem, do you think it's a model or a minimum or a recommended structure for the ecosystem, and so it can really promote the growth? And the idea that I have is that maybe we can build a global ecosystem, because there is a global entrepreneurship network, but I don't know how to connect it with these kind of events like this annual investment meeting. Thank you.
Okay. Can I just give the Chinese model a little more elaboration?
Go ahead.
As far as the Chinese experience and has gone, and to look at that as a case study, you know, I didn't do it just by saying they just raised a lot of money, you know, but the governance guidance funds actually put a program where they evaluate the venture capitalists, and they have a very interesting GP-LP equation where, you know, the GPs who are bringing in successful startups and actually have, you know, to incentivize them to, you know, make profit, you know, they get more money. And then they are then incentivized to go and open incubators near universities and near areas where there's housing, and, you know, and they choose rural areas because of the cost. Although, you know, it's government backed, and, you know, the party and the army are quite influential in China. But I mean, they actually took a very, you know, educated approach to, you know, to come in to get over this, you know, pre-Genesis cultural issue of just creating this ecosystem by incentivizing everybody involved into succeeding. There was a lot of contention up in the party, you know, worried about, you know, how 330 billion is going to, you know, create a lot of corrupt officials. You know, going to take the money and just run away, whatever. And they discounted that. They said they might be like 15 to 20% corruption, but they want to focus on the 80% that's going to lead to innovation. And so that model needs to be studied and, you know, implemented on a smaller scale with different countries and their different challenges.
Yeah, I would agree. There's no unique formula that really will allow you to create the ecosystem. Like, first really make an assessment of see what you have on place, and then really create an action plan. It will be an action plan for 5 years, and then really realize it. So I'm happy to exchange business cards with you and maybe give you some tips afterwards.
Great. Any next question?
Thank you. Excellent panel. My name is Hamid Mamdouh. I'm from the World Trade Organization, and we deal with governments and regulators. So my question to you is very simple. We've seen that due to technology and the fast evolving business models, regulators are really playing catch up. They're not keeping up with how the market is evolving. And it's not just in developing countries or in the Middle East, but also elsewhere, even in US, Europe. My question to you is, and we've seen that in examples like Uber, and how regulators are reacting, because of course there are disruptive business models. What would be your advice to regulators, the sound advice, from your perspective, with respect to how they would ensure that the gap between them and market developments and business models would at least narrow down a bit?
I'll tell you the major gap in the GCC at least is this. If you go around the world, you can do anything unless it's legislated that you can't. Here, you can't do anything unless it's legislated that you can. So the private sector has to sit there and fight to be able to do something. So if they can just change that policy, if you will, that it is permissible unless it is legislated that you can't do it. Right now, I'll give you a simple example. In Saudi Arabia, there's no law that women can't drive. There's just no law that they can drive. Believe it or not, that is true. So that's the biggest gap in my opinion.
I'm pretty biased on the topic because I want to see technology companies succeed everywhere, and oftentimes that means less regulation, maybe different in this region, but in most other places, less regulation is better than more for the tech companies. The thing that I would recommend to governments that I've seen be really successful is do sandboxes when they see new emerging technologies coming out. UK is doing this with fintech for our business. We've entered Canada through a sandbox type program. We're engaging actively with regulators in India, which allow us to carry out our fund model there as well. And I think that's really beneficial for a lot of tech companies globally, rather than regulating them out of business or not doing anything to lean in, creating an environment by which they could function more lightweight, but you could still kind of keep tabs on them.
Interesting. Yeah.
I believe that policymakers need to act and look at it like parents. Provide them the right atmosphere at home. Provide them with the needs, well, everything they need, education, leeway, let them be children, let them do whatever they want. Don't put too much laws on them, give them breaks. Instead of going and forcing your children to be a doctor or whatever it is, just give them a break, encourage them, give them the right environment, let them be creative, and once they become creative, try to steer them further.
Agreed. I think the ultimate answer for these kinds of questions is balance. You know, so you hear both sides of the equation. Well, we want to put more regulation in for this purpose, but we want less regulation in order to do the job. At some point, there's just going to have to be a midway point where these things meet. But you know, for startups to do what they need to do, they need breathing room to do that. And I think everybody on the panel would agree with that. Like more breathing room means more innovation.
In Germany, we have, for example, a system of a lot of association that being creating. They like really get information from the market, what is working, what should be changed, and then forwarding it like to the government. So really having more government people on ground touching issues.
Okay, I think we take 2 more questions. Yeah, 2 more questions from the audience.
Good evening, and thank you very much for your precious time. It was really amazing to hear from you guys how the things are rolling in investment business. So my name is Susanna. I'm a founder of a startup here in Dubai. It's called legaladvice.me.com. And my question to you, and I would like each of you to reply to this, what would be your advice if you were in your 20s? Like
Sorry,
your advice to yourself if you were in your 20s. What would be the one advice that you were saying to yourself when you were, let's say, at your 20s or 30s?
Mine would be take more risk. Yeah. Wasn't taking enough.
The problem with that question, is that after your 20s, you forgot how hard it was. So I'll kick off briefly. It's next to impossible to answer that. It depends on your personal situation, your safety network, your family network. So doubt will always be there. And I think the most important thing is try to speak to as many people as possible. So when you come here, network. You come and listen, but also network and all the others, and do one-on-ones. And I think you'll learn far, far more than 2 minutes each from each of us.
Great. One more question.
No, I think she wanted everyone to respond.
Everyone, yeah. Okay.
She had a wish.
A
woman had a wish. So let's.
All right, mine is very easy. I would say just do it. You know, we're worrying about so many things in our 20s, and we're worrying way too early about stuff. Just, honestly, just do it. You'll learn a ton from it, and it'll be exciting, and it may fail, but, you know, it's pretty easy. That's what I would told myself, anyway.
My wish maybe would be not to follow a too traditional education way, just work or start working something that was related also to my hobby, or to something that I really feel like identified, then just like listen, okay, what's the trend now? It's important to go to finance, working big consultancy, to maybe see a little bit more flexibility from the older generation and really, you know, taking more risk.
Jake is in his 20s.
Well, I'd say as a startup founder, you only do well when that's your singular focus, so I'd advise that.
My advice would be, if I were to look back at my 20s, I think there's the American proverb, which is, if you're the smartest person in the room, you're in the wrong room. And smart means cool, educated, networked, motivated, whatever, cool and smart means as a metaphor. But my point is, a lot of time was wasted on stupid people on my 20s. And I would have liked to just, focused on the good ones, and that's what I would advise. That's why I advise my younger siblings and my cousins, stay away from the losers, focus on the winners.
Well, I wish I was more adventurous, or at least I wish I had a more creative hobby that I could have worked on more and more in my 30s. So that's it.
There we go. I think we're all feeling a bit younger now, right? Shall we take one more question, guys? And yeah?
I have it.
Do we have one more question, or is that's
I have it.
Yeah?
So my question is for the entire panel. As we see a lot of artificial intelligence and 3D printing and robotics is becoming more and more prevalent, what do you see the jobs of the future being? What do you see the next big industry being?
I would say data, big data. It's everywhere. Genetics, automotive, it's everywhere. It's all is about data.
I would say I love the connected cars and the autonomous cars. I think that's a fascinating thing that's going to change society so much more than what we're seeing right now. So out of that will be a whole new range of industries and jobs and things to do.
Conference speakers.
I actually think there's going to be a continuing bifurcation, because of all the technology, where folks like us that are very privileged are going to be able to do things like become data scientists, and your children will be able to become data scientists, which I think is a big area, or engineers. I think there's another set of society, unfortunately, which will continue to be more in the blue-collar class. It's going to be harder for them to have that mobility.
If I knew I'd be investing in it, and I wouldn't tell everyone, then they take the idea first. I think there are a bunch of interesting platforms. It's hard to tell exactly what's going to happen, but I do think there's going to be a future of more automation, and self-driving vehicles, autonomous vehicles is one of the ones that I think is pretty clear, has a very good shot at working. So that'd be up there.
I would say just, of course, there's much more, experienced people here that would see, but I would, from what I noticed, the Snapchat IPO, the whole Lens AI augmented reality thing, this is what the common people, data, of course, is, big data. We're just in the, in the not even top 1% of the iceberg of what's going on with big data, absolutely. But in general audience, the thing that takes off the most is the cool gimmicky stuff, right? And so like the lenses and Snapchat, they give you an idea of how much people want augmented reality and CGI and cool and changing, and that's where entertainment is going, and that's where, fun is going. And so that's a space I like to keep a close eye on, but I would not do it directly. I would work with the AngelList, the Highlands, the other people, and follow.
Okay.
Medicine. I think there's a lot still undiscovered. A lot is unknown. It's a mystery. And I think there will be continuous demand for more discoveries in medicine.
I'll second that too. There's amazing things happening in biotech and CRISPR and other technologies that could be a true renaissance in the field.
All right. Great. Well, let me close the panel by thanking all the participants for being here today, the organizers at AIM for putting this together, and all the panelists who some have traveled halfway across the world to be here and have put a lot of effort in this conversation today. Thank you very much for coming, and thank you to all the panelists that have been here.